Okay, let's touch base with the management of Blue Star. Veer Advani, who's MD of Blue Star, joins in to talk about their numbers. Mr. Advani, good to have you on the show. Tell us what are the factors that led to your profit growth? What would you attribute the revenue fall to? Are worries on GST now behind, and can we see a full recovery?
Hi, good morning. Thank you for having me. I'll just run you through the numbers because we had excise duty in our numbers in Q1 of last year. So on a like-to-like basis, revenue grew 7% to 1,508 crores. PBT grew about 9.7% to 112 crores. It was slightly behind our expectations, and I'll come to that. But on the positive side, if I first start with our projects and central air conditioning business, I think it was a reasonably good quarter. While revenue only grew 3%, our operating profit grew about 60% to 40 crores. On the positive side, I think we're seeing inquiry levels picking up in real estate as well as in government-funded infra projects. Of course, order inflow is a little low in Q1, but we expect that to pick up as we go forward. We also had a bump up in our profit on account of some large projects that we closed. Also, segment 3, which is our professional electronics business, I think there are early signs of recovery, and we're feeling confident about the year ahead. If I come to segment 2, which is the cooling products business, which is, I think, where we've had some challenges, I'd like to give you a perspective on that. This is our room air conditioner business and our commercial refrigeration business. Here, the market has degrown by about 15%, and we degrew by about 10%. That was on account of the poor summer. Of course, GST is way behind us, so I don't think there's any challenge on that, but it was really a season issue that impacted the overall industry and ourselves. And as a result of that, we actually degrew in segment 2 by about 3%, but we were able to hold on to operating margins and therefore a flat performance for Q1. So a mixed bag, I think.
Okay, what about margins? Because they have also significantly expanded this quarter. Do you think these margins are sustainable going forward too?
Yes, so actually in segment 1 we had a bump up of about 200 basis points. I think that we had some large projects that closed, and so that may not be sort of the way forward, but on an aggregate basis for Q1 we see operating margins at about 5.5% to 6%, which is higher than last year. As far as our cooling products business is concerned, in spite of the degrowth in the market, we were able to hold on to operating margins. I think that's a combination of price increase. We had to let go of some of that in discounting, but we've seen some cooling off in commodity prices, and so we see that coming to our benefit. On the flip side, because we're carrying excess inventory to the tune of 60 days, we are impacted with finance cost and of course a hardening interest cost. So I think it's again a mixed bag as far as margins are concerned, but we're very confident about maintaining the margins for the rest of the year.
Give us a sense on UCP revenues. They've been muted. Is this a one-off?
Yeah, so as far as our cooling products, what I mentioned is we've degrown by about 3%. Operating margins have held, and so operating profit is flat. It is largely and exclusively due to the poor summer that we had. Looking forward, we expect to recover some of this degrowth in the rest of the year. So you know that Q2 and Q3 tend to be much smaller quarters for this segment of ours. Of course, we're looking forward to a strong festival season, which will help to make up some of the degrowth, but we'll be expecting a strong Q4 and a build up for the next summer to compensate on an aggregate annual basis. So, but I do want to reiterate that while the summer was not good and we did get impacted, fundamental growth, fundamental demand of room air conditioners and commercial refrigeration products continues to be intact, and we're feeling very confident looking forward into the future.
Okay. What about market penetration of water purifiers? Because that will also increase a good 25% in the next 10 years. And you are aiming at capturing a 10% market share as well in this particular segment in the next 3 years. How is it that you plan to achieve this?
So as you know, water purifier season starts in the monsoon. So as the room air conditioner season dies down is when water purifiers start. So we're in that season right now. We're feeling very confident about this current year. We have the right product portfolio in place. We've built up our distribution reach. Of course, there's a long way to go in expanding that, but we're currently focused on improving the efficiency of the distribution network that we have. We're coming off a low base. Our market share would be under 2% right now, but our aim this year is to close the year out with 100 crores of billing of revenue and build up substantially for next year and the year after. I think as a category, we feel very confident about growing our market share, given that it is a service-intensive product, it is a technology product, and as you mentioned, penetration levels are low, and so there's good opportunity for us as a brand to build up in that segment. So we're feeling, I think it's going to be a good year for that business as well.
Okay, we leave it at that. Thanks very much for joining us and giving us those details on your business plans. 6.5% higher. The market is liking the numbers as of now. You know what's really interesting, and I think it went completely under the radar, maybe we marked it at open, is ICICI Bank,